Members of the Federal Reserve tend to keep their future actions close to their chest, revealing very little insight as to any upcoming revisions to their monetary policy. It is this uncertainty that is once again moving gold to lower pricing and at the same time strengthening the dollar. Hello traders, Gary Wagner here. It is 1:49 in Honolulu, 7:49 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 21st day of July, 2023, and this is the Weekend Review. Gold futures, basis the most active August contract, traded lower today with a lower low, lower high, and lower close than the previous day. Currently, gold futures are down $7 or 0.36% and fixed at $1,963.90. Aided by dollar strength, gold continued to trade lower today, trading to a lower high, a lower low, and a lower close when compared to the previous day of trading. Gold is currently fixed at $1,963.90, putting it down about $7. With dollar strength and the upcoming FOMC meeting next week, it will be what they say following the announcement of a rate hike that will most definitely influence the market. Market participants will be looking for any insight they can glean as to whether or not the Fed has any plans on pausing further rate hikes throughout this calendar year. While the CME's FedWatch tool puts reasonable odds that that will occur, according to market participants, economists, as well as analysts, there is angst regarding the uncertainty as what the Federal Reserve will do with their monetary policy after next week's FOMC concludes. There are still 3 more meetings to be held: November, September, as well as December, which means that the Federal Reserve will have 3 more opportunities to raise rates in 2023. The chapter to this book remains unwritten. Today's price decline in gold was aided by continued dollar strength. The dollar gained 0.21%, taking the index to its current fixed price of 100.81. It is quite clear by simply viewing a daily candlestick chart of the dollar index that recently the dollar bottomed out, hitting lows just above 99, and has moved up substantially, about 1.75% in terms of value gained, as we have seen 3 consecutive days of moderate moves after trading to its lowest value not seen since March of 2022 at the beginning of this trading week. Considering that it is almost a certainty that the Fed will raise rates next Wednesday by 0.25%, that of course will take yields higher on U.S. debt instruments, which will in turn strengthen the dollar. So we believe there is further upside room for the dollar to move with no technical resistance until 101.50 based on this low here that happened towards the end of June. Just as we saw in gold, silver also traded to a lower value today. Currently, the September futures contract is fixed at $24.78 after factoring in an 18-cent decline, which amounts to a 0.73% drawdown. While it has been obvious that the relationship between gold and silver has decoupled, although they still can move in tandem, and I believe That most likely will be the case next week. In other words, with dollar strength, I would expect to see a continuation of lower gold prices as well as lower silver pricing. In terms of technical support, I would look at $24.50 down to $24.20 as an area where, if there is a further decline, there is the possibility for silver to find support at those price points. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you after the weekend for the next daily update and review. Bye-bye.